Hello and welcome. This is Brandon Waddell, Charter Market Technician, and I'm going to take a look at the analysis of the U.S. equity futures markets, index markets, that is. And we'll start off with a comparison here from the January 4th drop that we've been kind of experiencing so far. You can see that the leader to the downside is actually the Russell. So that's going to be the index that we kind of want to watch and follow to tell us when things are going to turn around again, because the leaders, which are both the Russell and followed by the Nasdaq, those will be the ones that hit the bottom first typically and bounce. That'll allow the other markets that are a little bit more buoyant, such as the Dow and the S&P, to actually rise off those lows. So starting off, let's go ahead and take a look at that Russell. Just get an idea of what's going on, larger picture, and then work our way down. So we'll start off RTYH 2022. Oops, there we go. And we're going to start off here. Actually, we can go to a weekly chart. But what I need to do for that is go to the continuous contract because of the changes that we've had in the Russell over time. There we go. So we didn't have any other contract to show going back when we were using the old TF, I think it was. Anyway, you can see that we've been kind of sideways. We're at the bottom of the range, but we had a false breakout to the upside of the range in 2021, led to a move to the bottom of the range. We had a weak move up following, which is suggesting that we may be able to continue to the downside. However, when you look at the RSI, there's not enough momentum to actually break to the downside as of yet. It doesn't mean that it won't, because you can see on our rally we couldn't get above 50, or just barely did, so there wasn't a whole lot of bullish momentum. But it doesn't look like we're ready to bust to the downside yet. We may just kind of stay sideways or even bounce just a little bit before we continue to go to the downside yet. So we'll be watching for that on the weekly chart. Let's go to the contract specific for the Russell and drop down to the daily chart now. Clear this chart up. There we go. So you can see that we, again, are seeing a lot of weakness, but still can't seem to get below 40. So the fact on the daily chart that we couldn't go below 40, this is actually showing us what's called a positive divergence, which suggests a bounce. The fact that we're getting about the same lows that we did before, but we made much lower lows on price. The RSI momentum indicator isn't showing any more momentum building. You can see even the last candle, that's what we call dragonfly doji. And when you see those, typically they're followed up with some new highs to be made. We just had one back here, and you saw the new highs be made on the next couple days. So here we had on Friday, I believe it is. Nope, sorry, that's for the shortened holiday session. We got that candle there on the 18th, and we should be able to see a couple of days to the upside before we drop again. But overall, this is not looking too bullish. It's looking like we might actually be able to finally get our breakdown and move to new lows. And again, I'll just go to the continuous contract on the daily here to get us an idea of where our next demand zone might be. It's not too far away. So if we do break down, we do have kind of a floor put in right here about 1988 to 1920. And once we bounce from that point, probably we'll retest the lows here at about 2100 before going lower. So that's what I'm kind of expecting for the next week coming up, is a little bit of a move up for Monday, Tuesday, and then start to drop by the end of the week and possibly go down towards that 1988. Then midweek next week, a bounce off the 1988. I don't see us getting there this week. It's pretty far away. But then a bounce back up to retest 2100 before we go lower. I think we're entering the bearish phase of the overall markets. We could drop down again on contract specific to a 4-hour time frame, see if we can fine tune anything here. And we do have an area of supply that was formed here. So if we do start to rally a little bit, watch for stalling somewhere in the neighborhood of 2180 as we're rallying up a little bit, and keep an eye out for that. I'm not really seeing anything else really jumping out at me here, but it does look like that is going to be where we get our temporary move to the upside, stalling out. If we can go any higher, we might, but I doubt it, get all the way up to 2260, excuse me. I don't see us getting up that high, but that's your next level supply. Again, I think we're going to stall out here somewhere before going lower. Watch for that first. Dropping down to 60-minute, maybe we can fine tune some of this a little. Not really. Doesn't change that much. As a matter of fact, what this looks like is that the zone was actually tested. Nope, it wasn't. It was a little higher up here. So you see there's a 60-minute zone, a little higher, but we kind of did react to that and maybe knocked out a little bit of the selling pressure. And then nothing else changes. So that's what I'm seeing on the Russell. Let's take a look at the Nasdaq. Start off on the weekly chart of the Nasdaq, and again, I'll clean up my chart here. And we're seeing weakness, of course, and well, not that bad. You see, we can't get below 50, which means we're not really seeing lots of bearish pressure. So you got mixed colors. We're just kind of in a retracement right now of this last upward move that we had in the markets. Let's just see if this lines up with any kind of Fibonacci retracements. Oops, wrong one. No, that was right. Let's see if that loads up. And it's taking a moment to change over the default there. But that looks like it's almost a 78.6% retracement. So a very deep retracement that we've occurred or seen. What is going on now? Something else popped up there. There we go. Yep, you can see 78.6% retracement. Now we're stalling out at 61.8%. So a deep retracement like that usually does not mean we're going to get a very meaningful rally afterwards. So the Nasdaq's a little more bullish than the Russell, but remember the Russell's dragging everybody down right now. So I'm not too bearish on the weekly chart unless our next rally up cannot get the RSI above 60. That would be kind of a telltale sign. So far, we've been above 60 on our rallies, as you can see back here, and we haven't been able to make a fresh low. I mean, short term, yeah, but long term, no. So this is not in danger of being broken unless our next rally up cannot get above 60. Going to the daily chart to see a little bit more fine tuning here, we don't really see any kind of supply overhead. We do have weakness. We've gone below 40 on these moves down, but we're just making a higher low. We're still making lower highs, so we're still technically in a downtrend right now. But if we can break this high over 16,000, then we'll be back in a bullish trend because we made higher low. We need to follow it up with a higher high for the bullish trend to resume. Hasn't done so yet, and if we do start to fall, looks like we kind of violated some of this demand already with the weak move in early January. Our next demand zone, by the way, is down here. If the Russell continues to drag us down. Oh, wrong one. See, that changes over to zones like it's supposed to. Come on. I don't know what's going on there. It's taking a little while, but maybe I'll have to manually do it. Not reacting well today. That's okay. We can do this. And, oops, there. Okay. Anyway, there you go. Oops, one more thing. I got rid of some of those numbers there. There we go. So that looks about right. And yeah, again, so if we watch as these rallies happen, if we can't get above 60, that's showing weakness, and watch to see if we stall out somewhere. Let's take a look at the 4-hour chart to see if there's any kind of a zone that we might run into. Doesn't really look it. The nearest zone is actually above that daily high, which would give us a bullish trend before we stall out at the 16,209 area. Other than that, not seeing anything on this time frame. But again, we need to be able to get above 60 to be able to make some new highs. Otherwise, we got a lot of weakness. We did have a positive divergence here on the 14th that caused or preceded, I wouldn't say caused, but it preceded the rally that we just experienced. And we'll see how much we get out of that rally. But there's a positive divergence where prices moved down, but the indicator moved up. Usually happens before prices rally. And again, if we can't get above 50, then we're likely to see a complete drop out of this. This is more like a bear flag. You have a big move down and then a kind of a consolidation as it tries to move up slowly before you usually continue the previous move down. So this would be your pull for the flag right there. If I draw the flag out, it looks, a little wonky, but kind of like that in a way. This should be duplicated from the breakdown, which would be right about here. That gives us a downside target right around 15,000 if we do break down. If we take a look back on the 4-hour time frame at 15,000, let's see if there's any kind of a demand zone here for a target. And there kind of is. Well, not necessarily. Let's see. The close on this candle is 727. High there, 728. So that's included. This is not a very good looking zone, but it is the zone from the higher time frame just below what we're looking at for a target. So right now, what I'm seeing right on this is on the 4-hour time frame, if you get a breakdown of this flag, which we can extend this to the right, and maybe clean it up a little bit better. There we go. This is kind of the pattern I'm looking at right there for the bear flag. So it depends on where this breaks down, but you would use the measured move, which was basically the high to the bottom of that red candle extended downwards. That'll give you your target to the downside if we break down, which again, we could do without hitting a supply zone. We just simply break the formation to the downside. Usually it'll happen when the leader moves to the downside, which will be the Russell itself. So moving all the way down to a 60-minute time frame. Let's see what's going on there. Let me get rid of the top of this. I don't want to have as many lines on here as I have. Again, we got that daily high to keep an eye out for the trend. But in the meantime, there's also little stair steps on the way down that could act as a bit of supply, including the top of the move right here. Rally base drop. That looks really good for a supply zone. Then you got this. This one's already been tested. So we could end up bumping up against the 15,729 for that formation before we break down. That would give you that shorting opportunity to target the 15,000 area. So that's what I'm seeing on the Nasdaq. Let's move over to the S&P and see what's going on there. Again, starting off in the big picture, the weekly chart first. And this is still not as bearish as the Russell, but bearish nonetheless. You can see lost a lot of momentum that causes dip down. However, we're still getting higher lows and higher highs, and we still haven't made a peak below 60, so the bearish pressure is not taking over yet, but it is looking a little bit weak. Not suggesting that this is a bear market coming as of yet. Here on the daily, we did have a high that did not get above 60. We haven't had that in a little while, and that suggests that we should continue to see some bearish pressure coming in on the S&P. So we do have signs of weakness. Our next daily demand that we see that's meaningful is right here. Pretty much what we saw in the Russell and the S&P, the Nasdaq at 43.54 in this case. So we break out of this formation and start our bearish trend. That's where we're heading to. As far as overhead supply, we do seem to have something here. If we do try to retest the prior highs, it looks like we may end up failing at 47.64 for supply. Going down to the 4-hour time frame, let's see what's going on there. Pretty similar. We do have a lower zone though right here. Rally, base, and drop. 6 candles, that's the max, but it is a good zone. 47.08, so we may not even be able to make it up to the 47.64, but yet stall out at 47.08 and continue to push down. You can see we had impulse down, kind of correcting a bit sideways. And let's see if there's anything along the way that might hold us up. This is a tested zone, as you can see, so that worked. That was our 4-hour zone. So we'll get rid of that. This is really nothing. So we have to look lower. It's actually a reaction to prior area. And before we get down to the daily, there's nothing, really. I mean, you can argue that, yeah, I guess this is rally, base, rally right there, but that's already been tested once. It worked. So there still might be some buying pressure at 44.30, but ultimately I think we're getting down to 4,300 or 43.50, excuse me. So what to look for now for this week coming up is possibly bounce off 47.08 as a supply zone to sell, targeting 44.30, then down to 43.54 ultimately before we get a meaningful bounce. If we drop down to 60-minute, it's pretty much the same picture that we saw on the Nasdaq too. Even though we don't have a supply at the high, we have drop-based drop at the lower area here of that 4-hour. So we're looking at about 47.01 to 47.21. That's the only thing that changes there. So finally, the Dow. Take a look at the weekly chart again, and we'll clean that up as well. And this is pretty much the same picture. You see we're moving up, and we're getting a little bit of weakness in the momentum, but nothing really scary on this weekly time frame so far. Going down to the daily time frame, and we see we did make a high right here without going above 60, and we were able to make a fresh low recently. So definitely seeing lots of bearishness here on the Dow. No real great demand. This was one that's already been tested, as you can see. So there still might be some buying pressure left in that area, but we'll see if it's able to go down below that. I'd have to go to the full, let's see, continuous contract. There we go on the daily chart. Let's go back and see where our next area of demand might be. This might be it right here at. Oh no, that's a retest of this. Got to make sure you look at the fresh areas here. So that's actually a retest of a previous zone. So if we drop, we could drop all the way down to 30,000. That's the next fresh area, it appears. Right there, drop base rally at 30,000 area. 30,235. Then we got the 32,000 again. That's already been tested partially. So if we start to drop on the Dow, look out below. Even though this has been holding up pretty well, it could turn around and drop because there's nothing really to hold it up other than some tested zones. So we'll keep an eye out for that. Oops, wrong button, sorry. And just closing out some of these on the windows I don't really need. Anyway, we go down to the 240-minute chart and actually should probably go to the specific, get some better detail there. And you can see drop base drop. There we have an area of supply at 36,000 that could start the drop. And let's see, do we have a tested zone here or has this already been broken? Actually, that doesn't qualify. This does. There we go. So you got 35,099, then we got that tested zone below. So short term, yeah, it looks like we're correcting a little bit today, and we should be able to hit the 36,000 and then drop down to 35,099 as the next target on the move to the downside. We drop down to 60-minute. Nothing changes, pretty much the same area. So that's what I got for us on the equity markets. If you got any more questions, please message me. If you like the video, please click like and subscribe so you're in for the next videos coming up. Until next time, trade safe, trade well, and everyone take care.